I've got some exciting news for anyone who's interested in weekly income ideas. I used to see investing one way, until this strategy flipped everything I thought I knew. Stick around until the end, because I'll walk you through a strategy that gave me a whole new perspective, not just more theory. For a long time, my investing life revolved around the traditional stuff. The blue chips, the slow and steady growth, and the quarterly income. There's nothing wrong with that, of course. But for an income fanatic like me, those 3-month waits felt like an eternity. I'd be checking my account, seeing a tiny trickle of income every quarter, and thinking, there has to be a better way. And then I found it. But first, a quick reminder. I'm not a financial advisor. This is educational content, not advice nor a recommendation. Investing involves risk, including loss of principal. Always do your own research and talk to a licensed professional before making any investment decisions. Past performance is not a guarantee of future results. Let's dive in. It started like any lazy Sunday, coffee in hand, scanning financial headlines while half ignoring chores. Then, a new ETF listing practically leaped off the page. It seemed too good to be true. Low costs, intriguing structure, and income tied to big-name companies. To be sure, I double-checked with a friend who is an expert in portfolio research. Days later, I was obsessed, studying charts, reading strategies, watching analysts break it down. My gut told me I'd found a sleeper that could make me look genius a year down the road. I've been burned before. Remember that clean energy ETF disaster of 2021? It wasn't a sweet experience. But this felt different, like the stars aligned. With today's markets, the timing seemed perfect. It all began with weekly income distributors, a group of ETF that handed out consistent and strong rewards. At first, I saw them as just another quirky corner of the market. But then I came across Roundhill's new lineup, and everything changed. These weren't just ETFs delivering weekly reward, they branded themselves as weekly reward ETFs, and they took it a step further. Instead of sticking to the usual playbook, they linked their dividends to some of the most recognizable and high-quality companies in the market. That's when my casual curiosity turned into a full-blown fascination. Picture an ETF that gives us exposure to Nvidia, Tesla, or Robinhood, and generates weekly income on top. It was like they had taken my favorite growth stocks and figured out a way to reward me for believing in them. Suddenly, my weekly account checks went from being a source of impatience to a source of excitement. Every week, I knew there would be a distribution, and that distribution gave me both a tangible reward and a front-row seat to the movement of some of the most talked-about companies in the market. So, when I heard the news that Roundhill was launching the Universe Weekly ETF WPay, a fund of funds that would compile all of its weekly ETFs into one single ticker, I was ecstatic. It was the perfect solution for someone like me who wanted a taste of all of them without the hassle of buying 15 separate ETF. It was a brilliant, almost genius move on their part, and a direct answer to what so many of us in the community had been asking for. Here's how I'd build a dividend powerhouse using 5 weekly ETFs, starting with NVII, the NVIDIA Growth and Income ETF. NVII is all about artificial intelligence and semiconductors. NVIDIA has been at the center of the AI boom, powering everything from data centers to advanced computing. And with NVII, I get that exposure, but in a format that also prioritizes distributions. For me, NVII is the engine of this portfolio. It's not just about the weekly income, it's about tapping into the most powerful growth trend of the decade. NVII isn't just playing the AI game alone, it balances its leveraged exposure with short-term treasury bills and cash instruments, which help provide collateral and add a touch of stability in the fund's design. Next up is YMAX, the YieldMax Universe Fund of option income ETFs. This fund is unique because it's essentially a fund of funds, wrapping multiple YieldMax single-stock ETFs into one ticker. The idea is simple. Instead of picking between Tesla, Nvidia, or Coinbase individually, we get exposure to all of them in one place, while the ETF uses option strategies to generate weekly income. Let's be clear, this ETF isn't a risk-free play. Options-based funds like YMAX can be complex. A portion of its distributions often includes return of capital, which means the payouts aren't always purely from profits. That's why I personally treat YMAX as an income booster, a supporting role in the portfolio, not the anchor. And the expense ratio is about 0.99%, which is pretty better than most traditional ETFs. What I like is the structure. Even when the market gets volatile, YMAX has a way of keeping those weekly distributions flowing. That kind of rhythm doesn't just feel professional, it gives me a sense of stability in an unpredictable market. One of my most favorite weekly ETF is ULTY, the YieldMax Ultra Option Income Strategy ETF. From the start, I knew this wasn't a set-it-and-forget-it type of fund. ULTY is built on synthetic strategies. Instead of buying the actual stocks, it uses option contracts to mimic ownership and then sells calls to generate income. On paper, that sounded exciting because it meant I could tap into growth potential while still collecting weekly distributions. After holding it for a while, I can say this. This ETF has been a mixed bag. The weekly payouts do show up, but the performance has been choppy. When the market is strong, it feels rewarding. We're getting both momentum and distribution. But when volatility hits, the synthetic structure can drag down the net asset value faster than I'd like. So for me, ULTY isn't the foundation of my portfolio. I treat it as a strategic wildcard, a piece that adds diversity and a bit of edge, but not something I'd rely on too heavily. Recently, its performance hasn't been as strong compared to some other weekly ETFs, but I still keep a small allocation because the structure is unique and it balances out my portfolio in its own way. Then my best weekly ETF, Roundhill Weekly Pay Universe ETF. WPay gives me instant exposure to the entire lineup of weekly ETFs under Roundhill's ecosystem. Think of it as the umbrella that pulls everything together, instead of trying to guess which sector or which single name will perform the best. WPay spreads the risk while keeping the distributions consistent. That's why I see it as my anchor position. It provides balance, diversification, and smooths out the volatility of the individual names I'll be adding on top of it. The beauty of Roundhill's Weekly Pay Universe ETF is in its simplicity. One ticker gives you equal weighted exposure to all of Roundhill's weekly ETFs, rebalancing every month. It's a set-it-and-forget-it way to tap into a very specific kind of investment strategy, one that I've grown to love. And do you know the best part? It provides consistent exposure to multiple high-quality U.S. companies without the need to constantly manage 15 separate positions. Before diving into the fund-to-fund structure, it's important to examine the underlying components. I've spent significant time analyzing these ETF, and the performance has been anything but ordinary. Roundhill's lineup is stacked with some of the biggest names in tech and growth. Group 1, Apple, Nvidia, Palantir, Coinbase, and Tesla. Group 2, Berkshire Hathaway, Meta, Netflix, Amazon, and Robinhood. Group 3, Broadcom, AMD, Google, Microsoft, and MicroStrategy. And here's why I picked Roundhill Weekly Pay Universe ETF as my favorite weekly ETF, not a recommendation. So I've been on the front lines, watching all those stocks rise and fall. My journey has been a mix of pure joy and stomach-dropping anxiety. Take Nvidia, for example. I'm a huge believer in the company's future, especially with the boom in AI and semiconductors. So when I saw the returns on the weekly ETF tied to Nvidia, I was thrilled. Since its inception, it has been a phenomenal performer. It's a great example of how this strategy can work perfectly when the underlying stock is on a tear. On the other hand, there's Tesla. I'm a long-term bull on Tesla, but its volatility has made the weekly ETF a lagging one. It's a humbling reminder that even with a stock you believe in, the short-term swings can be frustrating. This isn't a strategy for the faint of heart, but for someone like me who can handle a little risk, it's fascinating to watch. Then there's the tale of Palantir and Coinbase. I held both. They were two of the original rock stars of the weekly income lineup. For a while, Palantir was the best performer of the entire group. Its returns were absolutely astonishing. I watched Coinbase, which had been doing great, take a huge nosedive after an earnings report. It was a hard lesson in the power of a single event to impact results, but it reinforced the idea that income and growth can come with periods of volatility. What's really interesting is that in a number of cases, these weekly ETFs have actually outperformed their underlying stocks. This is a rare thing to see with income ETFs, and it's a powerful testament to the strategy Roundhill is using. It's not just about getting dividends, it's about potentially getting a reward more than we would have just by holding the stock. Let's be real, this strategy isn't perfect, and it's not without risk. Each of these weekly ETF is tied to a company with its own unique volatility and market pressures. Tesla, for instance, can swing wildly on a single news event. Palantir or Coinbase can react sharply to earnings or regulatory news. These are real-world examples of how underlying stock movements can affect the income strategy. And leverage is part of some of these ETF, which can amplify distributions but also amplify swings. Not all weekly paying ETF are created the same. Some concentrate on ultra-short contracts that expire within the same day, while others adopt a broader approach with slightly longer positions. At first glance, they may appear similar, but the underlying strategies that drive their payouts are very different once you look closer. Despite that, the Roundhill Weekly Pay Universe ETF is unique. It helps smooth out volatility by combining all of these weekly payers into one ticker and diversifying across multiple companies, sectors, and economic drivers. It spreads the risk, reduces the likelihood of a single stock dragging down its total results. One lesson I've learned through experience is that timing makes a real difference with rewards. Weekly distributions create a steady rhythm, giving us the chance to reinvest regularly and pick up more shares at today's prices. Over time, that consistency builds into real compounding power. And if you stay patient and disciplined, it becomes one of the most effective ways to grow long-term wealth. Here's a clear example. I'm holding a weekly ETF tied to Palantir. Each of my income gets reinvested, and whenever the market dips, those incomes scoop up more shares at lower prices. That starts a powerful snowball effect. More shares lead to more dividends, which buy even more shares. It's straightforward, but when repeated week after week, month after month, it can turn into something remarkable. This is where WPay really shines. Instead of tracking 15 individual ETF, we can invest in one ticker and we automatically get exposure to the full weekly income universe. It's convenient, professional, and much easier to manage, especially if you're a long-term investor who focused on building consistent income streams without the stress of micromanaging multiple funds. Actually, I can't ignore the human side of all this. Watching your portfolio move week by week isn't just numbers on a screen, it's emotions. The highs feel thrilling, almost like a win you didn't expect. The lows test your patience and make you question everything. When you zoom out, you realize it's not about chasing quick wins, it's about sticking with a strategy, riding through the noise and letting compounding quietly do its job over time. One of the other things I love about these ETF is that they are transparent. We can see exactly what we're invested in, how dividends are calculated, and when distributions occur. Transparency matters, especially in complex products, and Roundhill has done an excellent job at making this clear for investors. I also need to highlight something that often gets overlooked: risk management. No investment is completely risk-free. Stocks can swing up and down. Entire sectors can underperform for stretches of time. And leveraged ETF, in particular, magnify both the wins and the losses. Looking back at my own experience, the combination of individual weekly ETF and Roundhill's Universe ETF approach has changed how I view ETF investing. It's not just about waiting for the next quarter. It's about creating reliable and strong income that compounds intelligently over time. It's also made me much more aware of underlying company performance, sector rotations, and the importance of balance between growth and income. The truth is, markets are unpredictable and no strategy works 100% of the time. But for investors who are comfortable with this style, I think weekly ETF, especially when combined with a fund-of-funds approach, open up a really interesting way to look at income. It's about balance, consistency, and finding a rhythm that actually works for your financial journey. Roundhill keeps pushing the envelope in the weekly income space, and I'll be watching their new launches closely. The way I see it, weekly ETF, especially the fund-of-funds model, bring together growth exposure, strong income, and diversification in one package. They're not some power solution. Like any strategy, they require patience, discipline, and an understanding of the risks. But for investors who are willing to play the long game, they open up a really interesting path forward. Whether you've been investing for years or you're just getting started with dividend strategies, these ETF are worth learning about. For me, the takeaway is simple. It's not just about chasing rewards, it's about creating a system that rewards consistency, patience, and smart decision-making. That's the real value I see in weekly ETF and Roundhill's fund-of-funds approach. I'm not saying you should buy any of these ETF. Not a financial advice, I'm simply sharing this to inspire and motivate anyone who's interested in the idea of weekly income. So do you think weekly income ETF is the future, or just hype? Let us know in the comments section. Check out the next video. I shared a unique strategy there that could really help you take your income approach to the next level. See you in the next one.